Hi everyone, and welcome back to today's morning report with me, Richard Berry, market analyst at Handtech Markets for Tuesday the 29th of July. I'm going to move on to euro dollar now, and this euro chart continues to remain under pressure. This stepped decline that we've had over the past 3-4 weeks shows little sign of really stopping. You've had a little bit of consolidation yesterday, but as you can see throughout the past few weeks, every time you get any sort of real consolidation, the sellers just re-engage once more and come in and push this euro to a lower level. You look at these momentum indicators, all pretty bearish. The RSI below 30 is potentially going to give hope of some sort of a technical rally at some stage. Certainly the last time we got below 30, which was late May, we had a little bit of a sideways move, and actually across the course of a couple of weeks we actually added around about 70-80 ticks to the upside before the pressure went on the downside once more. So there is a possibility you could get a technical rally at some stage, but at the moment I don't think it's worth backing. I think you've got to be just considering that the selling pressure is on. There is resistance overhead at numerous levels here to hold back the euro recovery. You've got that breakdown resistance at 34.75 now that comes in. That's held on 3 occasions pretty much without bursting really significantly to the upside, and you'd say that that is now the key near-term resistance. I'll show you here on the intraday chart. You'll see here that this is that decline we've seen over the past few weeks, and certainly that 34.75 pretty much is the peak. You could even argue also that even in the last day or so, 34.40 seems to be a bit of a level that the bulls are not really willing to break above. You've got all these moving averages on the hourly chart. Falling in bearish sequence. This 89-hour moving average, the blue line, seems to be fairly much a bit of a resistance. That comes in at 34.50. So just pretty much across the board we're fairly negative. In terms of what we're looking at today, certainly the MACD lines have recovered back to neutral, and every time that's happened in the past 3 phases, really, the selling pressure is re-engaged once again. So around that neutral point, those MACD lines start to put the pressure on the downside again, and it looks like that could be the case once more. So any sort of strength, I think, in this euro is a chance to sell. In terms of downside targets, we're still looking at this big double top. That was the original top pattern that we had from this daily chart. That gives us 33.75 as a target. But then since then we've had also this big head and shoulders top as well that gives us a target of $1.30, big figure. But that's quite that's 430 odd pips away, so it's quite a big target to the downside. But certainly near term, the target you'd be going for is this 33.75. Anyway, I wish you good luck in your trading today on the euro. This confidence data from the States this afternoon, if it comes out strong again, would put pressure on this euro to the downside, and that could be seen this afternoon. Anyway, I wish you good luck in your trading today, and I'll speak to you later.